Back to the Precision Trader University. In this video, just want to cover the option chain. Option chain. Again, I've had a lot of ones asking questions about which strike should I choose and all that. Again, ultimately, you should, at this point, you should understand the bid, the ask, the delta. And again, this being our three primary columns that we want on an option chain. For the most part, everything else, you can take it off. Okay. For what we're doing here, day trading and scalping, all you want to know what the bid ask is, the spread in between that. Okay. So the difference between this bid and ask here, and then ultimately what your delta is, because your delta is telling you how many shares that you're controlling of that stock. So for example, if I have the at the money right here, the 46, that means I'm controlling 46 shares of SPY here. So that means for every dollar it moves, so this next dollar that it moves, say it moves in my direction, I'm going to make $46. But at the same time, we know that deltas move up and down based on the dollar. So for example, it moves up $1 and it moves up or $2. You know, the first dollar I'm going to make 46. The next dollar move I'm going to make 58, then 70, you know, and so on and so forth. But again, it's the reverse on the downside. So with that said, you know, understanding that around 25 to 30 is where your delta starts slowing down. Okay. So that's where you're starting to lose slower. All right. So understand that. So again, once you get around here, say around this 25 delta right here, now, once you start coming, you know, get in here, this one, it starts slowing down. So now it goes from 23 to 15 to 9 to 5. So again, it really starts slowing down. That's why a lot of people, when they're playing options, they like to play and take advantage of the around the 25, you know, the 25 delta there. So 20, you know, really anywhere from 20 to 30, but that 20 to 25. But at the same time, you got to realize people that are playing that delta, they're giving themselves plenty of time to be right. Now, how can you take advantage of that when you're playing intraday or scalping? Well, you have to make sure you're out of the position very quickly. Okay, you're in something special, you know, because again, that's the thing that we have to discern in this video. What contract you buy makes a difference. What time of the day? So whether it's expiration day and what time of the day. So that's your big things. And of course, the time of the day becomes more important whenever it's expiration day. So let's use expiration day as an example here. So here's SPY expiration day. Now, again, we are 2 hours from the close. Okay, so let's go ahead and make this a rule here. The last 3 hours of the day, okay, really even into 3 to 4, the last 3 to 4 hours of the day, if I'm going to play, say I'm playing calls here, I'm playing anything outside of the money. And for me, a lot of times, whenever I'm playing outside, I like to be about $2 on expiration day. I like to be about, you know, anywhere $2 to $3 strikes out of the money. So again, right in here in this 20-25 area, I really like to be in that. But at the same time, I know for me to play this, I'm going to need something to go in my direction. And I don't need to be in this play more than 10 to 20 minutes at most. Okay. If I do that and starts chopping around and all that, I'm going to start decay. I will start, you know, having to deal with some of the decay factor. But at the same time, I'm in something less, you know, we find a key level, the SPY ES channel, you know, we find a key spot, say we're shorting SPY at 385, you know, right there, we know we're not going to be in that play for an extended period of time. So again, I have no issue being outside of the money here, $2 to $3. Okay. So now again, these have decayed this, you know, because we're, you know, already 4 hours into the day, you know, these would have had a lot more decay factor in them earlier in the day. But again, take that in consideration. Okay. If I'm playing expiration day, what time of the day is it? Now, as the day goes on, I want to be more in the money if I'm going to get into something that I think that I might be in this for, you know, 15, 20 plus minutes. If I'm going to do that, I want to be in the money. Okay. In the money. So once you go up here, now you're in the money calls. Now understand how to calculate your break even. So take, for instance, the current price on SPY right now is 382.70-ish. Now, if I want to quickly be able to find out what the break even for this contract is, I mean, your broker might have a way to do it, but for me, you know, I'll do most of the time or all the time, every time I'm looking I don't click on a button that tells me what my break even for the contract is, or some analyzer, option analyzer. I can just look at it and do the math here quickly. So in this case right here, okay, for calls, we're going to be adding these contracts together. So you take the strike and then the contract. So in this case, it's a 380 strike, and I'm adding the $3 contract. So that means my break even is 383. The current price, well, hold on, I actually don't have the current price. All right, so the current price for SPY right now is 382.60. That means I have 40, there is 40 cents of SPY decay in this contract. So that means if let's just say time froze, everything froze as far as the price on SPY, it finished the day exactly where it's at right now. Okay, so again, on this 380 contract right here, I know that ultimately, yes, there's going to be 50 cents worth of decay on it. So that contract would be $2.50. They would lose 50 cents of decay because, again, it was just at 300. So it would be $250 at the end of the market. It would decay $50. Okay, but at the same time, if I go up, the more I go into the money, once I start getting in this 85, 80, once you start getting into the 80s and the 90s, that's where you pretty much take out all the decay out of the contract. Okay, all your decay, is, taken out. So in this case, 379 plus, $4 here. So that gets us to 383 plus take away 15. Yeah, so that puts us right at 282.75-ish. And the current stock price is 15 cents away from that. So that means I would only lose $15 if I held this contract to the close and the price didn't move at all. That's it. I would only lose $15 in decay. That's it. So again, understanding that, whenever you're getting into contracts is, will protect you. And of course, as you get up here to, once you start getting up here to 95 to 100, I mean, yeah, like I said, 90, again, you're looking at your delta. That means I'm only going to have $5 in decay by the time this thing's closed. This means I have $8. It's $8 away from 100, because 100 or 99, 100, that means there's no decay. You're in essence buying, that's like you getting the shares there. No decay whatsoever. But with that said, 100 shares of SPY right here at $800 is way cheaper than buying 100 shares, the $37,000 that it would take to buy 100 shares. Right here, it takes $800 to buy 100 shares of SPY. Okay, that's way cheaper than buying 100 shares, just from your broker. So the option's way cheaper. For me, it's like somebody's playing shares. Like I said, I can understand it because it allows you to be more precise. But at the same time, just understand that, yeah, once you get up here to this 95 to 100, I mean, yeah, you're in essence buying shares, you're 100 shares of SPY. Now, again, like I said, that's just a quick way to do your calculation, what your break even, what your break even would be on the stock. So again, for calls, you're just taking the contract, adding it to that. That's what the break even, if the price did not move, at all into the close. So that's what your break even be. And then you would be able to see how much you would lose on that contract. So like I said, the last 2 to 3 hours of the day, or even 3 to 4 hours, the last 3 to 4 hours a day, you have to be conscious of what contracts you're getting and how long you're going to be in them. Okay. If you're only going to be in them, hey, I'm going to either take a quick winner. I'm either going to take a quick winner, a quick loser. I'm going to take a quick, get out of there. You're going to be in this thing 5 to 15 minutes. 20 minutes is really pushing it. Really, when you start getting in that 15, 20 minutes, you can get into some, some pretty good little decay in that area. So on expiration day, and understand too, as you get closer into those 3 to 4 hours a day, decay speeds up. All right. The first couple hours of the day, implied volatility is still up pretty good. The contracts can hold pretty good. But once you get past that first couple hours of the day, now your contracts are going to start decaying, especially if the market starts chopping around, volatility goes down, all that good stuff. So, yeah, and at the same time on the put side. So on the put side, I'm subtracting. So if I want to find out what the break even is, but at the same time, I know I can look over here at my delta. And once I get into this 90, this 90 deltas, now I know there's very little decay in these contracts, very little decay. At the same time, if you want to figure out real quick, what the current at the money is. So this is 380, this is 382. So I'll subtract that. That means 381 would be the break even for this contract. Okay. So for me to break even, To break even on this contract right here, SPY would have to finish the day at 381. Okay, so again, I'm taking 382 minus $1. It's 90 cents, but we're just rounding it up here. So $1, that means at this, the break even on this contract, if I bought it right now, even though SPY's at 382.70, I would lose all my money on this contract because the break even of it is 381. Same thing here, 381 minus, we'll just say 60 cents. So again, the break even on this would be 380, 380.30 or 40. So $380.40 would be the break even on this contract. So if SPY doesn't get down to that spot before close, I mean, I lose all the money on that contract. So again, you have to understand when you're going to get into an option contract, how long am I planning on holding this? Because this has no hope. You lose all your money. You lose all your money on these contracts, unless you start getting really, really close. So again, once you start getting up here into the 70, 80 range, that's where you start having a little bit more protection. Your decay slows down. And then of course, once you get into the 90s, it becomes, minimal, little to nothing decay in that delta range. So now earlier in the week, and that's another thing too, people say, well, should I just play the next expiration? So that's another common question I get asked there. So for example, the next expiration, here's our next expiration. So next expiration right here, these are $300 contracts. If you're playing at the money, you're going to pay $300 for this contract. Whereas on expiration day, what's a $300 contract going to? $300 contract is going to get me an 80 delta. I already have little to no decay in this contract. So why? I mean, if I'm going to buy there's no point. In my opinion, there's no point. It makes, because again, that expiration date or the next expiration is still decaying. It's still decaying. It's just decaying slower. Whereas this, when I go all the way up here into this 300 area, especially if I just go one more strike up. Now, if I just go and get a $400 contract, I mean, I pretty much have no, so again, the thing you don't want to mess around with is getting this next expiration right here and having the temptation to hold it. The market pushes against you. You're wrong. You didn't take your stop. Oh, well, I'm just going to hold it. No. We do not want to do that at all. No, it's not a matter of if, but when something really bad is going to happen. For example, today was a prime example. What did the market do? Market gapped down. All those people that bought calls yesterday, the market dumped. They all bought calls. And then they're like, oh man, surely it's got to come back. Well, today, what does it do? It gaps down and then it pushes down even further. So all those call buyers destroyed. They are all either done for if they're expiring today, or if they got next week's expiration, they're down, 50 to 80 or 90% on their contracts. So it's not worth it. Not worth it. We're going to get plenty of opportunities every day. We're going to get, opportunities to make money intraday. We don't have to hold anything at all. We were just talking in voice chat, how Sora has been able to take $2,000 to $100,000, this year that, he's been in the server this year, and he's been able to do that. And one of the things that that's allowed him to do that was getting rid of swing trading. That was one of the first things that whenever he got, he came in and he, wanted me to teach him, wanted me to educate him. First things, hey, get rid of the swing trading, get it out of there. Okay. We don't want it no more. And again, that 2,000 to the 100,000, he hasn't done that with swing trades. He's done that day trading every day, playing what's available that day. I ain't worried. We're not worried about, next expiration of the following day. No, not at all. So again, you do not need swing trading whatsoever, and don't even give yourself the temptation to do it. If you're wrong, you pick you get in a contract and it decays on you and whatever, you're wrong. It didn't move in your direction. That's fine. Take your stop, get out of there, And the same thing during that day. Like I said, if you do have something you feel like you may need to hold for 20, 30 minutes, maybe even an hour, you need to be in here in the money. Like I said, $80, $90. I mean, really, your 70 delta is about the cheapest thing that I would want to be in. If I'm expecting to hold something potentially for, 20, 30 minutes to, on up for that day. You definitely don't want to be messing around with this junk. You're just asking to be destroyed. So with that said, take that in mind whenever you're buying a contract. Now, again, let's just say it's something that expires, we're buying something on Monday, Tuesday, Wednesday, that expires Friday. Okay. Now, when it comes to that, it really doesn't matter the delta. It really doesn't. It doesn't matter the much because you still got plenty of time there, and you don't really have to worry about the decay. You don't have to worry about 20 minutes. You don't have to worry about 30 minutes and it, decay eating into your contract on a Tuesday or Wednesday or Thursday. Now, when you get to expiration day, now that's when you have to be more aware. All right. Okay. What strike am I getting? All that kind of stuff. But when you're dealing with Monday, Tuesday, Wednesday, and for the most part, Thursday, it doesn't matter. You're not worried about, because again, if we're in a play for, 10, 15, 20 minutes, it ain't going to make a difference because the vast majority of our plays, we're in them 20 minutes or less. It doesn't take us a long time to make our money. Now, if you're holding runners, that's something you want to take into consideration. If you're holding a runner, especially on expiration day, a runner, that's something to keep in mind for sure. But other than that, no, that's pretty much it. Yeah, like I said, your bid, your ask, your delta, that's really the only thing that you need on your options change for what we're doing. Yeah, and like I said, I showed you how to calculate your break even on the contract immediately. Like I said, for call side, you look at it. For the call side, you look at it and you add it to the contract. For the put side, you look at the contract, you subtract the contract price from it, and that tells you exactly what you're breaking even. And then you can see, okay, all right, if I hold this thing and price doesn't move at all into the close on expiration day, bam, this is what my break even will be. So anyway, just makes it really easy for you to find out which contract that you want to buy. But like I said, when time decay is not really a factor for you to worry about, like I said, that 20, 25 delta, yeah, for the most part, that'll be your best bang for the buck, anywhere from 20 even up to 30. Like I said, that's the sweet spot. The only reason that you wouldn't want to be playing a 20, 25 delta on a Monday, Tuesday, Wednesday, or multiple days to expiration. The only reason you wouldn't want to be that is if you think, man, I may have to hold this thing, all day long. All day long, yeah, you're gonna get some, a decent amount of decay in there. But at the same time, we've never held a play all day long. Now, maybe a runner, but at the same time, if you got a runner that you're holding all day, I mean, you should be making some really good money on it. Because again, if you're holding on to a runner for that long, and yeah, it's just chopping, yeah, get out of there. And yeah, like I said, don't want to, but at the same time, your winner should be in the money. Your runner should, should have some nice profit built up in it, which should protect it. But with that said, that will take care of this video. Hope that makes sense when it comes to picking which option you want to take during the trading day.